Hello friends, in our previous lecture we have started with chapter number 2 and its adjustments. We have already seen the format of 6 accounts which are required for the final accounts, and also in our previous lecture we have started with each and every adjustment, as I need to repeat that there are 33 adjustments given in the book, but I have divided that adjustment into 9 groups and each group has their own hints and the easy way to remember the adjustments. Let us first discuss that adjustments once more so that it will be a short revision for us. Group 1, we have done 3 groups, so again repeating group 1. Group 1 has stock related adjustments. What is the hint there? All the types of stocks are shown in the balance sheet of asset side balance sheet. Okay, so one effect will be of any type of stock will be always given in asset side of balance sheet. Now what are that 2 adjustments? First is closing stock, trading account credit side, that is credit effect, and next is debit, means asset side of balance sheet. Stationery stock, subtract from stationery expense on the P&L account debit side, and next asset side of balance sheet. When we are subtracting from debit side, it is credit effect, so that is credit effect, and asset side of balance sheet is debit effect. Group 2 is adjustments related to expenses and incomes. In that, outstanding and receivable are baki. Baki is always plus, and advance or prepaid is always minus. There are 4 types of adjustments. First was outstanding expense. Outstanding means plus and expense means debit side. So P&L debit side plus. So debit side plus is debit effect, second is credit effect, so liability side of balance sheet. In this way you remember. Next is receivable income. Receivable means plus, income is on credit side, so credit side plus, so P&L credit side plus is credit effect. Next is debit, debit means asset side of balance sheet. Next is advance or prepaid expense. Advance or prepaid means minus, expense means debit side, so P&L debit side minus. Debit side minus means credit effect. One is credit, next is debit. Debit means asset side of balance sheet. Then last, advance or prepaid income. Advance or prepaid means minus, income means credit side. So P&L credit side minus. Credit side minus means debit effect. If one is debit, second is credit. Credit means liability side of balance sheet. So this was about adjustments relating to expenses and incomes. Now friends, group 3, bad debts, bad debt reserve, and discount reserve on debtors. What is the hint? All these 3 adjustments have same effect. For that same effect, first we need their format. Format for bad debt reserve and discount reserve are almost same. In bad debt reserve, 4 items: BD trial balance, BD adjustment plus BDR adjustment minus BDR trial balance. First and last is trial balance, between both are adjustments, and last one is minus. Discount reserve is same to bad debt reserve, only the second thing is removed. Discount allowed, trial balance. Now there is no discount reserve in adjustment, no discount allowed in adjustment, delete that second thing. So this plus discount reserve adjustment minus discount reserve trial balance. So that is format about discount reserve. Common effect for all is P&L account debit side in format, and next is subtract from asset side in the balance sheet from debtors. Friends, these were 3 groups which we have seen. Now today we are starting for the 4th group, that is for unrecorded goods. Okay. Now we are going for type 4. Or we can say it as group 4. Group 4. For unrecorded goods. Hint. For purchase, sales plus, for their returns minus. What this hint is meaning to tell, that for normal purchase and sales both effect will be plus, and for their returns, means for purchase returns or for sales return, both effect will be minus minus. Okay. Now which are they? UNREC means unrecorded purchases. UNREC sales means unrecorded sales. Now what is the hint saying? For purchase and sales both effect will be plus. Since standard 11th also these adjustments we have learned. Now first of all you need to know is that purchase is related to creditors. So how should write? Now where purchases is shown trading account debit side, purchase plus balance sheet liability side, creditors plus. As I said, both effect will be plus, purchase plus and creditors plus, but where they are shown, purchases are shown on trading account debit side and creditors are shown balance sheet liability side. So you should know that. In the same way, unrecorded sales, where sales are shown trading account credit side, sales plus and balance sheet asset side, debtors plus. So friends, as you can see what I said, for unrecorded goods, for unrecorded purchase and unrecorded sales, both effect will be plus plus. Both effect will be plus plus. The purchases are on debit side, so trading account debit side, purchase plus and creditors plus. In simple way, if you remember, you can just remember easily. Unrecorded purchase means purchase plus creditors plus. But where they are shown trading account debit side and balance sheet liability side. In the same way for unrecorded sales, sales plus debtor plus. But where sales are shown trading credit side and where debtors are shown balance sheet asset side. Okay? In the same way. Unrecorded purchase returns, and here unrecorded sales returns. Unrecorded purchase returns, unrecorded sales returns. As I said, purchase and sales will have plus plus, so returns will have minus minus. The same thing is to be written, but these things are plus plus, these both things are minus minus. So trading account debit side, purchase is minus, balance sheet liability side, creditors also minus. In your textbook, some complicated things are written. First subtract from purchase return, then subtract from purchase. Not these things are required. Okay. What I am writing is the simplest way to remember. Sales minus, balance sheet, asset side, debtors minus. So this thing is over. But how will you remember? The hint is very easy to remember, my friends. What is the hint? Whenever we are having purchases and sales, so purchases and sales are both plus plus. Whenever we are having the returns, so the returns are always minus minus. If you remember this simple rule, then nothing will be difficult. For purchase and sales unrecorded, purchase plus creditor plus, sales plus debtors plus. For unrecorded, purchase return and sales return. For purchase return, purchase minus creditor minus. For sales return, sales minus debtors minus. Simple thing to remember. In standard 11th also this same thing was there and same thing was given to you in the notes also. You may write this. Okay friends, so these are the transactions for unrecorded goods, purchase and sales plus plus and their returns minus minus. That's all with the group 4. Now we are going for group 5, which is about rectification of goods. Also related to goods only, but it is related to rectification. This group 5 is little bit important and difficult, okay? You should understand very clearly. Group 5, rectification of goods recorded. We have studied very clearly that rectification of error chapters. Now again one more concept of that chapter, which we were writing only journal entries. Now no journal entries, but we have to remember its effect here. Now what hint is there for such a type of adjustment? Hint. All the adjustments will have 4 effects. Here each adjustment has 4 effects, friends. Rectification of goods recorded, in that every adjustment will have 4 effects. Now friends, why 4 effects? The reason is simple. By mistake we have recorded the goods at other place. So for that rectification 2 effect, and for writing the correct entry again 2 more effects. So 2 plus 2, 4 effects. There are 4 types of transactions we are seeing. Adjustment in that first 2 effect is for rectification, next 2 effect is for correction. Means where these goods are to be recorded, for that it is given and draw the lines. Okay. Now the first adjustment is about purchases recorded to sales. For all these types of adjustments, you need to understand what the adjustment is meaning to say. Purchases are recorded to sales. Actually they are purchases, but they are recorded to sales. So in sales they should not be recorded. So we should subtract from sales. Now whenever we are subtracting or adding anything to sales, it is affecting the debtors also. So if sales are minus, debtors are minus. If sales are plus, debtors are also plus. So what will be the effect for rectification? Sales minus, debtors minus. Then next, actually what are they? They were purchases. So what effect will be given? Purchase plus, creditors plus. So how to write in simple way? Trading account, credit side, sales minus. Balance sheet, asset side, debtors minus. Now debtors is writing for short. Okay, let us write full name. Otherwise someone will get confused. And again trading account, credit side, purchase plus, balance sheet, liability side, creditors plus. This is the first adjustment. Again we will try to understand what the thing is being given. Purchases are recorded to sales. See, if you are learning it, if you are by hearting it, the things will be very difficult for you, my friends. But if you are understanding the things properly, then it is my guarantee that you will not make mistake anywhere. It's my guarantee. If you are understanding the things as I am explaining, if you are just by hearting the things, then it will be okay for you, but not okay for me. So if you want that, if you never forget this thing, then listen here. Purchases are recorded where? Purchases are recorded to sales. So in sales it should not come. In sales it should not come. Think about it, that purchases are wrongly recorded to sales. So in sales it should not come. So you should subtract from sales. Now whenever you are subtracting from sales, sales are related to debtors, debtors are also minus. There will be no effect where sales minus then debtors plus. There is no such effect. But in your textbook, for your confusion, they are giving simply, but simply you can remember sales minus debtors minus. Again, this is for rectification only, that purchases are recorded to sales. So in sales we have given the effect. Now actually they are purchases. So how to record the correct effect? They are actually purchases. So purchase plus creditors plus. Now number 2. Opposite to it, opposite to first, sales recorded to purchases. Now again, what error we are doing? Actually they are sales, they are where recorded? They are recorded to purchase. So they should not come in purchase. So it is again simple, trading account, debit side, we should subtract from purchase. And purchases are related to creditors. So if purchases are minus, creditors are minus. But where creditors are shown? Balance sheet. Simple thing. Sales are recorded to purchase. So where sales are recorded by mistake sales are recorded to purchase. So purchase minus, creditor minus. Now actually they are sales. So sales plus debtors plus. Sales are on trading account credit side, debtors are on balance sheet asset side. So if I am asking you this adjustment, that sales are wrongly recorded to purchase. So recorded where? To purchase. So purchase minus, creditor minus. Actually they are sales, so sales plus, debtor plus. So this is the reason for 4 effects. Because the first 2 effect is for rectifying it, the next 2 effect is for correcting it. Actually what they are there? They are for correction. Okay? So again these 2 types are what? Okay. Number 3. Purchase returns recorded to sales. Now compare the thing between first and third. They are almost same. In the first one, purchase is recorded to sales. In the third one, purchase returns recorded to sales. What is the basic difference and what is the common thing? Both are recorded to sales. So in sales it should not come. So what we are doing? Sales minus debtors minus. They are wrongly returned to sales. So sales minus debtors minus sales minus debtor minus. Now in the first one, actually they are purchase. So whenever we are writing purchase, purchase plus and creditors plus, because we are increasing our purchase. But what is the difference between 1 and 3? Here actually they are purchase returns, here actually they are purchase. Purchases and sales are plus, as we have seen in group 4. Always purchases and sales are plus for correcting, but for rectifying everything is minus. Here everything will be minus, no effect will be plus in 4th time also. But actual thing we will decide based on purchase or purchase return. Whenever actual thing is purchase, so plus plus. Whenever actual thing is return, so minus minus. So the next effect will be purchase is minus, creditors minus. Same thing is written, but what is the basic difference? Here actually it was purchase, so purchase will increase. And here actually it was purchase return. Purchase returns we are subtracting from purchases. Now I am writing the whole thing. Where sales are recorded, trading account, credit side. And where debtors are recorded, balance sheet, asset side. Where purchases are recorded, trading account, debit side. Where creditors are recorded, balance sheet, liabilities. Now 4th one we don't need to see in our notebook or textbook also. You may understand 1 and 3 are related, 2 and 4 will be related. What will be the question of 4th one? Please engage. Sales are recorded to purchase. So what is the difference? Now no sales. Sales returns are recorded to purchase. Compare between 1 and 3. Purchases recorded to sales. Purchase returns recorded to sales. Both are recorded to sales. But what is the basic difference? These first two effects will be minus in everything. Next two effect is dependent. If there are purchases, then plus plus. If there are purchase returns, then minus minus. So for this also, compare with 2 and 4. Sales are recorded to purchase. Sales returns are recorded to purchase. So the first effect will be same. They are both recorded wrongly to purchase. So purchase minus, creditors minus. Compare with this thing. Now actually they are sales returns and actually they are sales. If they are purchases or sales, then plus plus. If they are returns, then minus minus. So second effect, sales minus, debtors minus. Now we are writing the whole thing. Purchases are on trading debit and this is on balance sheet liabilities. Sales are trading credit, this is balance sheet assets. Now we are again trying to understand the whole thing again. You may see the formation of transactions. Okay friends, now look here. These are rectification of goods. The previous rule also will be used. When purchases and sales are there, actually they are plus plus. When returns are there, actually they are minus minus. Here. And whenever we are rectifying something, so always it will be minus. Why it will be minus? The reason is simple. Where we do not want to write and we are writing it by mistake, so always it will be minus. And where we need to write it is most of plus or most of minus. Now compare the thing. First two and second two. In all, first two effects are minus. In all, the next effect is either plus plus or either minus minus. Why in first two all are plus plus? Because they are purchases and sales. So purchases and sales have plus plus effect. Second two are returns. So returns will all have minus minus effect. And first two effects are always minus minus. Now we are learning adjustment number 1. Purchases are wrongly recorded to sales. I am not writing the word wrongly, you can understand it. It was actual purchase. But where they are recorded by mistake, we are recording to sales. So sales it should not come. So sales minus, debtors minus. And actually they are what? Actually they are purchase. So purchase plus, creditors plus. These previous names you should remember. Where purchases are there, trading debit. Where sales are there, trading credit. Okay. Now adjustment number 2. Sales are wrongly recorded to purchase. Actually they are sales. But where they are recorded to purchase. So in purchase it should not come. Purchase minus, creditors minus. Actually they are sales. Sales plus, debtors plus. So first two are over. Now next. For learning third one, compare with first one. Purchase recorded to sales and purchase returns recorded to sales. Only the difference here is about returns. Purchase returns are recorded wrongly to sales. So sales it should not come. So sales minus, debtors minus. Actually they are not purchase, they are purchase returns. Whenever they are purchase, so plus plus. Whenever they are their returns, then minus minus. Purchase minus, creditor minus. Only the simple thing. For learning fourth one, compare with second one. Sales are recorded to purchase. Here sales returns are recorded to purchase. They should not come in purchase. So purchase minus, creditors minus. Now actually they are sales returns. If they are actually sales, then sales plus, debtors plus. But actually they are sales returns. So sales minus, debtors minus. So I hope everyone is getting my points. What I am meaning to say, adjustments are very easy friends. These are first and second effect. These are third and fourth effect. First two effects will always be minus minus because it is for rectification. Next two will be dependent. If they are purchases and sales, then plus plus according to group 4. If they are returns, then minus minus. So I hope you are understanding the things to my point. Okay friends, now we are going for the next group, that is group 6. Every day we will see three groups. On previous day we have seen first, second, third. Today we are seeing 4, 5, 6, and tomorrow we are going to see 7, 8, 9. So 9 groups will be over. Okay? Yes friends, now we are going for group 6. I hope everyone is writing in your book. No one has sent me the work of this chapter, so I hope everyone will write it fast and send it to me. And okay, don't watch all the lectures together. Especially I am saying, these chapters, all lectures cannot be seen at one time only. You have to see 2 or 3 times, and in one day you cannot see all the lectures. Okay? Friends, last group for today, group 6. Then we will see the next group tomorrow. Group 6. Now this group 6 adjustments are already learned in the format itself. Whenever we were completing the first chapter after completing the 11 sums, I have shown you P&L appropriation, then capital and current accounts. So in that interest on capital, interest on drawings, interest on current account we have discussed, that things only are written. Okay? So it will be very easy. Now group 6 is about transactions between partners and partnership firms. Transactions between partners and partnership firms. Okay? In both the effects will be shown in following 2 accounts. Which accounts? Only 2 accounts will be shown. P&L appropriation account, partners capital or current account. Why all we are writing? As you all know, we have discussed this thing. If we have only capital account, then all the transactions are in capital account. If we have current account, then permanent transaction only of opening, closing and additional capital are here. All other transactions are in current account. You know these things. If you don't know, please watch our previous 2-3 lectures. You will understand the things. Okay? Yes. Okay, now transactions. Adjustment. First effect. Second. Okay. The first adjustment is regarding interest on capital. Okay friends, interest on capital, where first effect and where second effect. As I said, how to show this information. Interest on capital. Capital is credit, so its interest will also be credit. Again, capital is credit, so its interest will also be credit. So credit side of capital or current account, if we have only capital then capital account, if we have both capital and current, so it will be on credit side of current, so it is dependent. Partners capital or current account credit side. Why on credit side only? Capital is credit, so credit side of partners capital or current account, if one is credit other is debit, P&L appropriation account debit side. Okay, after that, next, interest on drawings. Now drawings means debit, capital means credit, C for credit, D for debit. In this way also you can remember. Interest on capital, capital is credit, so credit side of capital on current account, and next is if this is credit then that is debit side. Again the same way, D for drawings, drawings means debit side, so again partners capital or current account debit side, if this is debit then there is credit side, P&L appropriation account credit side. This is very simple to remember. Both these things are opposite to each other. Interest on capital, capital has credit balance, so credit side of capital or current account, and if one is credit other is debit side of appropriation account. Interest on drawings, drawings are debit, so its interest will be on debit side of capital or current account, and next P&L account credit side, P&L appropriation account credit side. Why? Here it is debit, there it will be credit. Next, interest on debit balance of current account. Again, interest on which balance? Debit balance. Debit balance is on debit side, so first effect will also be on debit side. Partners capital or current account debit side. Why debit side? It is interest of debit balance, so debit side of partners capital or current account, if one is debit other is credit, P&L appropriation account debit side. See, always make the difference between P&L and P&L appropriation. Don't write only P&L. APP appropriation is required. Sorry, not debit, credit side. Then next, opposite to it, interest on credit balance of current account. As you all know, current account can have debit and credit balance both. So this is interest of credit balance. Credit balance means credit side. So partners capital or current account credit side, P&L appropriation account debit side. If one is credit other is debit. Now the last, salary, bonus, commission, remuneration means also a type of salary to the partner. Salary, bonus, commission or remuneration to partners only, not to other people. Now as you all know, salary, bonus, commission, everything are the expense of the business. So expenses are on debit side, but P&L appropriation account debit side. Not P&L account, P&L appropriation, because these are the partners. If one is debit, then other is credit. Partners capital or current account credit side. If one is debit, other is credit side. So friends, these are the adjustments relating to these are the adjustments or transactions between partners and partnership firm. And what is the hint? Only the effect will be in two accounts. No other account name is written. First is interest on capital. Capital means credit balance. Credit balance means partners capital or current credit side. If one is credit, P&L appropriation debit side. Interest on drawings. Drawings are debit balance. So partners capital or current account debit side. If one is debit, other is credit side. Interest on debit balance of current account. Debit balance means partners capital or current debit side. One is debit, other is credit. Opposite to it, interest on credit balance of current account. Here the credit balance, so partners capital or current credit side. Sorry. Here I have made a mistake. In current account only it is fixed. Partners current account only, no other account. Sorry, this is my mistake. Interest of current account will come only in current account, no other account. So current account debit side and appropriation credit. Here current credit side and appropriation debit side. Now salary, bonus, commission or remuneration to a partner, it is a expense of the business. So debit side of appropriation account and one is debit, credit side of current account. In this way you will remember group 6. So today group 4 and 5 are related to group goods and 6 is related to partners and partnership firm. Daily we are doing only 3 groups. On the first day 1, 2, 3, on today 4, 5, 6 and on tomorrow 7, 8 and 9. So our 9 groups are completed. All the transactions are completed. Hope you all understand the transaction. You are seeing the lectures 2 or 3 times and may send it to me as soon as possible. That's all for today. Thank you so much.